Okay, we are live. Welcome back, everyone, to the Prospero.ai stock market live streams. It is a big day in terms of the Prospero signals and how they are viewing the market. We are seeing red take hold across the board. The Russell is down the most currently, down over 2.5%. Dow Jones is next at 1.8%. QQQ and SPY are both down between 1.5 and 1.25%. So red across the board, and we are seeing some weakening of the Prospero signals. SPY net option sentiment hit zero today. Let's see live where it is right now. And it is currently still at zero. So looking like there's a bearish move today. Will it continue over the coming days and possibly, dare I say, weeks? Obviously, the SPY net option sentiment was at zero during the entire run of the tariff kerfuffle in the last half of March and early April. So not a good sign there. QQQ is now back below the bullish line of 40 as well. It's at 30 currently. So both of those readings are looking uh, much lower. So we're going to ask George how he's feeling about that when he gets in the stream, how reactive he's going to be to these signals being weaker. Is he going to really change things up with the model portfolio at the end of the stream today? Or is he going to wait to see if these readings, close the day this way and open up tomorrow that way? So we'll get into all of that good stuff. Then we're going to react to some stocks that had earnings, Canada Goose and Target, both earnings already reported. And then we're going to get into Snowflake, which has earnings today after the bell, who had pretty strong earnings. I mean, not earnings, signals in Prospero, but it is a weak day now. So we'll see how Snowflake is looking when we get into that live. Then we have to go over Wolfspeed, which is a stock that George was short in with, I believe, 4 positions, and they filed for bankruptcy last night. And they were one of the weakest looking stocks in the Prospero signals. So I think George said it might even be the best call all time for the signals. So we're going to get into that story. I think he's very proud, and rightfully so, of the Wolfspeed call. Then we're going to get into Bitcoin, which was trying to break out above its all-time highs today, and it got very, very close. Let's see live where it is now. I think it went down as the market went down, yes, but it's still actually green on the day, up 1/3% right now, back at 107,000. But it almost hit 110,000 today, so very close. We'll go over Bitcoin and where it can go from here with our signals on the overall market. Then we're going to get into a story of Klarna, which, if you guys remember, we covered how they were looking to possibly go public, and I believe they still are. But there was a story about how people are buying now and paying never. So we'll go over Klarna, some of the other buy now, pay later stocks that are currently on the market, and other small fintechs that could maybe have problems with their customers. And then we're going to go over CoreWeave and quantum stocks like D-Wave, because we talked a little bit about it on Monday. But since then, CoreWeave has gone insane. The stock crossed $100 today. I think it's up like 15% or so. Let's see. It's up almost 17% right now. And in the last month, up 180%. And if you guys don't know CoreWeave, it's a newer IPO. Like an AI infrastructure type company. So we'll go over CoreWeave, how George views them, and touch back on the quantum stocks after D-Wave made a monster move. I think it was up 30% yesterday. And then last but not least, we'll get into this OpenAI story, which came out today, how they are going to be acquiring a new company for $6.4 billion. Stick around till later on, and I'll let you know which company they are acquiring and why it's affecting Apple and Google stocks. And that's all the stories we'll go over today. I see we have 75 people that have already tuned in. Thank you guys for showing up nice early. If you enjoy the streams, please be sure to hit that like button. We will go through all of these stories in just a moment when George gets in here. But like I said, the likes are good for the algorithms on Twitter and YouTube. So like it up, folks, if you love these live streams. If you're new, we live stream every Monday at 11 a.m., every Wednesday at 3 p.m. So welcome. And hello, George. Welcome to the streams. We'll get into all of these topics in just a moment. And as always, we will go over the model portfolio at the end of the stream today, which with our signals and the way they're moving is sure to be a big one. So you'll want to stick around till the end to watch that. And we have to start today, George, with the Prospero signals themselves, because it's a major switch up today. For the past, I don't know, week or so, I feel like we've seen the SPY kind of lagging the QQQ, and it's been below the 40 mark a lot of the time. But today it made a move all the way down to 0, which we haven't seen, I think, since early to mid-April, when there was a lot of volatility in the markets. And actually, this is the lowest I'm seeing the QQQ live right now. It's at 23 as well, so below the bull level of 40. How serious are you taking what you're seeing in Prospero today? How reactive are you going to be? And yeah, just your overall how you're feeling about the markets with us seeing such bearish signals right now.
Well, it's kind of the reverse of where I was last week, which is kind of funny to be on both sides, right? Last week I was kind of like, the signals seem a little higher than they should be, in terms of like what's going on in the macro situation, right? But now, I mean, I think especially because, I was kind of worried about that Walmart news and them saying they were going to need to raise prices, and I was kind of surprised that the market was not reacting to that. So this kind of feels like a delayed reaction to that. And obviously, we're going to talk about, Target having bad earnings. So that's what I feel like is happening, and I'm taking it very seriously, because if there's one thing, if you look back on the election, a big reason people voted for Trump was the economy, right? And inflation being a big reason for that, right? So we know people are sensitive to prices, and they really feel it and can drive elections, right? It can also drive markets. And I think these price impacts are about to hit. Typical inflation cycles do not happen fast, right? The prices kind of inch up. But I think the way the market's reacting, and when Walmart says things like that, which never really does. Like, I can't recall a time that Walmart has ever, complained about inflation, right? Or talked about like, hey, like prices are going to get higher. That's not really their bag. And I mean, I think part of it is because they import a lot of stuff. Typically, I think why you don't see Walmart say things like that is, even if their prices raise a bit, they're confident that relatively, they're going to still stack up well. And that's not kind of the case, I think, with some of these supply chain disruptions that we've already seen. And supply chains are kind of always going to impact a little slower. So I do think that's what we're seeing right now. And yeah, I'm concerned. I mean, it's one of those situations where, we've been saying this all year, like where it's like, we still don't have any long-term deals. As I've said, I do think the fact that, China was feeling the pain and came to the table and, agreed to a pause, I think is an important positive macro sign. But I think there's, you can't really mince words here. When this, price impact starts to hit, it's going to affect consumer confidence. It's going to affect the markets. And I think that's where, you can start. I think you're seeing what you're seeing now, right? Because institutions, they do react to retail investors. So I do think there'll be some amplification when retail investors start to be like, shit, prices are higher. I need to conserve my capital. But I also think this is kind of some preparation from institutions, especially, we see SPY and options that are going down, hedging against the worst reaction to what retail investors might start to think when they do start to see these prices impact them. And I do think these price impacts are kind of imminent.
So Mario asked in our chat, do you think both the up days and the down days are being driven by retail? So I guess how much control does retail have over the moves of the current market?
I don't think really retail controls the market. I think retail can have a huge impact on individual stocks, whether they be meme stocks or stocks like Palantir. I think, when you get a stock like Palantir, one of the things that happens is that, institutions have an expectation that retail is going to continue to buy it. So they don't want to miss out on a lower price, even if they say like, oh, this valuation is crazy. If the valuation is like quote unquote crazy, but they expect retail to still buy it, they're not going to deal with the stock the same way. They're going to want to get in earlier before it goes up, and they might not be able to get it at a lower price. I think that's a really good example of how, retail affects things that aren't like, purely meme stocks. But if you're talking about the market, no. I mean, we had all this evidence when the market was going down that retail was buying, right? And the market didn't really care. The market was going down as, we heard that, retail was buying, Tesla, a counter example to what we were talking about. A lot of people were buying Tesla, but it's kind of a different situation than Palantir. And I would identify it as following, right? I think in the situation we talked about with Palantir, institutions are like, we might not get it at this price. Retail could keep buying. We might as well get it. And that has an amplification effect. But in the case of Tesla, being bought a lot, like record amounts of retail buying it, but it's still going down. I think that's a situation where retail is basically saying, well, this is going to catch up. Institutions are saying, retail, this is really going to catch up with you. So we don't mind continuing to short because it's sales based. And I think that's kind of the difference in a situation like Palantir, where a company is going to keep growing. People don't know what the right amount of overpay for the growth is, so they just kind of end up overpaying, and it's not really necessarily even viewed as overpaying because you can't agree on what an overpay is, right? I think in a situation like Tesla, where sales are declining, even if retail is like, I don't care about that, I do think institutions expect that to kind of catch up, and it's not like an overpay and how much do you overpay situation. So it's a really case-to-case basis, but on a market level, retail does not control enough of the flow that even if all of retail is agreed that the market is a buy. Like I said, whatever stocks retail are buying, that could affect those stocks, but it's not going to drive the market up on that alone.
So I'm sure there's some investors that have kind of just been sitting on their positions for a little bit as the market's gone higher. What is the strategy if they're thinking, all right, now's the time to make a move? There's a switch up happening that you would recommend. I see the VIX is at 20, which was over 50 in early April. Would you suggest buying the VIX, SQQQ, just trimming some stuff? How do you think people should go about it if they want to make a change currently and hedge a little bit more?
I think thing one is always, especially if you have a larger portfolio, trimming your portfolio. Um, that's like where you start. And that's like honestly, when I've had bad results ever, it's because and the market's changing fast, it's because I haven't trimmed my portfolio enough. And part of that is just like forcing yourself to go through the exercise of saying, I like some of these stocks better than others, is going to have a good effect on it. But the other thing is just if you slim your list, you're going to be able to watch the shorter, like the smaller list more closely, and you're going to be able to get more out in front of problems than anything. So I think that's step one. I actually like, especially with this price rise thing and QQQ net option sentiment getting stronger, I like SCC. And it always sounds like I'm saying SEC, so I'm going to type it. I like SCC the most of any inverse ETF right now because it's hard to argue that the market is going down for any other reason than concerns around inflation prices. Who's it going to hurt the most? SCC, and even some of like retail stocks. I mean, even some of the stocks that we're looking at, Arbor Realty is one that we shorted today, and it's looking very good. And so, when you start to see things like concerns in real estate, concerns in retail, it's like retail stocks. It looks like general consumer spending concerns, and there's definitely times where we've seen where consumer spending is hit harder than real estate because real estate is kind of a safer asset for consumer spending, largely because these companies cash flow a lot more in a lot of cases. I mean, not always. Like real estate is pretty broad, but a lot of the times they cash flow better than other companies. So that's kind of like a firmer kind of like dividend base. But yeah, we're definitely seeing different things that touch the consumer other than consumer defensive really taking a hit today. So yeah, I'd say this looks like a consumer spending concern. So like, yeah, if you're concerned, I would trim, I would take some SEC, or I think as a story we're about to talk about soon. I always say, don't rush shorting if it's not in your comfort zone. But I also always say you should start, paper trading shorts, learning how to shorts with small amount, because shorting stocks can really help you, as I'm sure we'll talk about, I think, in what is the next story.
So I want to go through some stocks that have had earnings recently. It sounds like you're not going to be too interested in buying Canada Goose. They were up as much as 30% today. I just looked, they're up 20% still now after they beat on earnings and revenue. I'm wondering, can other retail stocks like them with such low expectations, kind of from a lot of the stuff you just mentioned, also react positively to earnings going forward, thinking Nike and Lululemon and others like that?
Yeah, I mean, definitely. Um, the sentiment lowering um, ends up creating an opportunity. But I will say this: you're really betting on earnings at that point. And like, betting on earnings is always a bit of a gamble. But betting on earnings on a retail stock with the, tariff conditions and everything, like, yeah, there's a possibility that they beat and it goes up. But, we also saw that, like, Restoration Hardware, kind of reporting on a bad news day and going down. I think it was like 60%, which, like, I've never seen a stock go down 60% unless it's like a bankruptcy filing or something like that. I've never seen like a retail stock go down on, like, just reporting earnings and expressing some concerns about a macro situation. Granted, this is like kind of the mother of all macro situations, but that is to say, there's an extreme downside to this too. And yeah, I mean, it's just, I don't I don't think it's worth it. It's not in our risk profile. But there's opportunity there. If you feel like you have a unique take on if Canada Goose is going to beat their earnings, by all means, go for it. If you work in an apparel store and you, like, see that, other sales are slowing down, but Canada Goose is staying strong, then that's something, or if you're have some kind of vendor relationship with them, or you work in their shipping and you see that they're, like, their weigh stations are still very good in terms of the number of coats they're shipping, right? That's the Like, when I say if you have a unique take, that's what I mean. I don't think, like, I don't think you owning a Canada Goose coat would qualify you as having a unique take, which is to say, there's better ways. There's better, more fun ways to gamble than buying Canada Goose stock or a stock like that heading into earnings.
So next company I want to go over that reported is Target, which is lower again on earnings. They're actually now at like a 5-year low, and they guided to single digit declines for the full year. And I can't get over the fact of how different Target and Walmart stock looks. I'm wondering because Walmart is like within 10% of all-time highs, Target at a 5-year low. Would a good trade to be go short Walmart and long Target and think that those stocks are destined to meet somewhere in the middle, somewhere in the future, or do you not see it that way?
No, I don't think so. I mean, I think the reason that Walmart is doing well is that they are, like we're saying, they're better positioned in terms of pricing, right? And even if the tariffs are going to affect that, like, they're going to affect that probably. I mean, I don't know where Target sources their stuff, but I don't imagine it's America. But maybe it's, like, less from China, for example. I don't know enough about where they source their stuff, but I think the most important thing about why I don't like that trade is that I don't think um I think the business models are very different. Like, I think Target is going for a higher quality, higher price point, but still kind of cheaper than other places. Walmart is just going for straight cheap, and that's why it's doing better. We're definitely heading for a place where the cheaper you are, the better. And, like, honestly, Walmart talking about them raising prices is them just being afraid of their margins, but they still will have better margins than anyone else that has to raise their prices because they're still sourcing things cheaper than everybody else. Again, the one variable there is I don't know the mix of Chinese goods versus other places. For example, that could make Target better. But that's a perfect example of, something that I don't feel like is in my wheelhouse. But if you want to, like, you could do a deep dive and be like, okay, I want to look at their product mix, like what percentage of these products come from China and other places, and do like a deep dive tariff analysis. That's certainly possible. It's not really how I want to spend my time. But that's a bit different than the Canada Goose situation, right? Because the Canada Goose situation is like it's just like you really have to have a knowledge of how their product is selling. And that's a little more difficult, right? If you're talking about something like this, that's like long, short, or even like a thesis um, on just one of the sides. Knowing the product mix and all you have to do to win on a trade like that, especially like a double-sided trade, is just be able to analyze where the goods come from. That the tariff impact is public. You might have to do some kind of guess on how long this China thing lingers. But that I would view as a more realistic analysis, but still one that I don't pursue, because at the end of the day, like, that's why we have our signals. Like, I have confidence when I look at our signals. I don't need to do a ton more work to be like, okay, I have a thesis, right? And I think I'm good around that. Like, this is both a good amount of work to do, and then it's just like you're also just reading. There's also a lot of like tumult in it, right? Like, some of the Chinese goods, since it's been pulled back, we could only be talking about like a month or two of added pain. And then if it goes away on a longer time scale, that won't necessarily work out to you. So not only is it a hard thing to research, it's a hard thing to really pin down the impact of. And to be clear, that's the kind of thing that good value investors do, that I did in the past, that you can get to a good conclusion on. It's just not our style here.
All right, so last earnings stock I want to go over is Snowflake, which reports today after the bell, because they are on our short-term bull list. 93 net option sentiment, 82 upside still today here. But it seems like the kind of, with SPY being at zero, maybe they're not the exact stock you would want. But how are you feeling with them having high signals in Prospero?
Yeah, this is the kind of thing that I could get my head around. If um if it was a better market today and a better market overall. I could say, you know what, I don't think Snowflake is bad to bet on. I still think their business is like very, solid, especially like the data infrastructure business. I view very similarly to, kind of the AI business as a whole, except I don't necessarily think it ever became as overvalued, even though Snowflake is a pretty aggressive valuation. So yeah, I do think that if today was a green day, if SPY net option sentiment especially was looking better, I would feel better about that situation. But given the conditions, it's not something that I can really see myself gambling on.
All right, now it's time to get into possibly the greatest Prospero signal call of all time, as you said yourself, George. So, Wolf Speed stock, which you were short 4 times in, announced bankruptcy last night and was down as much as 73% today, currently down 60%. So, can you take us through what you saw in the signals and this whole Wolf Speed trade and Prospero.ai, how it sniffed it out?
Yeah, I mean, what I really, really like about this one is, as people know, we've built the signals to, and I kind of want to see how much of the portfolio was. We've built the signals to, sorry, I want to see a percentage here. Okay. We've built the signals to, kind of guide an analysis, right? And give input. And like, a lot of our case studies are like, oh, AppLovin appeared really high for its market cap. It had 90 upside, 90 net option sentiment. But the reality is, like, a lot of stocks have 90 upside, 90 net option sentiment on a given day. Not a lot, but some, right? It's not automatic, right? There was some context there, like it was very high for a stock of that market cap, very high relative to where it had been historically. Those things are super important when you look at it, and there's some nuance to it, because we've simplified it about as much as you can, but you can't simplify it beyond a certain point. What was crazy about the Wolf Speed thing was we just kept on seeing it go down in momentum score. For those that don't get our trading letter, maybe you'll consider getting it, because it was a very clear signal in our trading letter. I mean, so much so that we already had 4 positions. It was already 11% of our portfolio yesterday, but it hit an all-time low. And to see how, like in momentum score, which momentum score is a combination of, it looks more at moving averages of upside, net option sentiment, social sentiment, and technical flow. And it's actually looking at the changes in the moving averages, the difference between the 1 day and the 7 day, the 7 day and the 28 day, the raw score relative to, the midpoint of 50. So it's looking at a lot of different things and reward structures, but we've been working on it. And not only was Wolf's momentum score of 8, like by far, I don't think I've seen anything below 11 or 10, other than I think Wolf the day before, I think was, close to that, maybe 10 or 11. So it was 8. And the next highest score was 20.6, to give you an idea of just like the difference in scale and just how bad of a momentum score Wolf Speed had. So yeah, it was super interesting. We, we had obviously kept on adding it as the momentum score went, but like, yeah, it's really, really cool, and a validation of like not only our work, but the way our work is evolving, right? Momentum score is probably our newest signal. And to see, it do exactly what it was designed to do, to take all the signals, clarify it into like one point, and to say this is like far beyond more bearish than anything else I've ever seen in that score. It really validates two things, right? It validates the evolution of our process, and we're doing the right things, and building on signals, making them more advanced in the right way. But it also validates the whole theory behind Prospero, right? And the whole theory behind Prospero is that, some institutions know about things before the wider market, and they bet in the options markets about it. And if we train algorithms to detect those bets and have sensitivities to those, then we and our users can get in on that before everyone else. So yeah, that's what's really cool, and why I think this is our best case study. It's down a ton. We had it in our investing letter. We had it since Sunday night, because actually even last Friday, Wolf was the lowest in the momentum score. So the first stock I was trying to add on Sunday night, pre-market, which was kind of rare, but for those that read our letters, I basically, since stocks went down so much after market on Friday, we're very big on honesty, transparency. We didn't want to add drop stocks on Sunday as we normally do, because the market moves so much, and we would view that as dishonest. So in the name of honesty, we held our stocks. But I did want to get more exposure to, downside in the market, positive exposure to downside. So yeah, when it opened, Wolf was the first thing we added in our investing portfolio on Sunday night. We also added at that same time more in the trading portfolio. We loaded up. So yeah, I think that's just a really, really good, hey, it's a good example of why you get our paid stuff, right? Only our paid readers got that Sunday night tip. Only our trading letter, our paid investing letter readers got that Sunday night trip. Only our paid trading readers saw like the obvious momentum score. And yeah, I mean, you could say that momentum score predicted a bankruptcy, and that's something that, we haven't been able to say so clearly, because our signals are a little complex, but it's very cool in the evolution of our signals that we're building this new stuff that's just like, hey, if you see an 8 momentum score, shit's about to go down. So yeah, we can use that in the future. And, since I'm in a good mood about this, anyone can email me, George@Prospero.ai. I will give you 33% off our investing or trading letter.
There you go, everybody. We're gonna get like 30 emails probably to George today. But I want to ask about Wolf now, because I feel like in the current market that has the meme traders, we'll call them, companies that file for bankruptcy almost become a target for some reason. Is Wolf destined to like trickle down to zero, or what happens to the stock now? Does it get removed from exchanges? How does it play out from here?
Oh man, betting on bankruptcy, it's pretty hilarious that like retail traders do this. Because like I call things radioactive sometimes. Betting on bankruptcy, any bankruptcy is radioactive to me. Like don't go near it. Like because there's the announcement, right? And the announcement just makes it more likely than not that in a full bankruptcy, equity holders get wiped out, unsecured debt holders get wiped out, secured debt holders have some preference in how things are distributed. We don't have any time to teach you about secured debt holders, but there's some stories that I have early on in my equity career about that. Maybe I'll tell it next time. Um, So, what happens after a company declares bankruptcy, right? Or says they're going to file, right? That's that starts a bit of a dance and a negotiation. There's plenty of companies that will file just as leverage with their unsecured debt holders to get them to change the terms of their debt. Maybe they're secured debt holders because their secured debt holders aren't necessarily guaranteed to get the full amount of their debt either, right? It depends. And Wolf has a lot of debt, right? All of that, takes place in court. There could be a restructuring. There could be, payouts to, various like different parties in the capital stack. So it's just that. It's just that it's like likely that you get wiped out. And that's why a stock goes close to zero, because it's just likely. But, you know, filing doesn't necessarily mean a bankruptcy happens. It could actually mean that, because if you look at it this way, right? If you look at it as an unsecured debt holder, right? And you say, oh, I might get wiped out anyway, right? And debt trades on the open markets, right? So your debt could be trading at like 10 cents on the dollar already. Your unsecured debt in Wolf. I really don't know what it's trading at. I don't really even look at that too much. But basically, they could say like, oh, we could knock off a certain amount of the payments. We could knock off a certain amount of the principal. You could agree to, maybe if there's any cash on the books, buy back the debt at an even lower price, which would dismiss it and make it, the company can buy it back on the open markets, or they can ask for to negotiate a lower price with the other people that own it, which might not be the original owners. All of that's kind of on the table once you start negotiating. So it doesn't necessarily mean you'll zero out as a shareholder. What signal was used? Momentum score was used, which is as like a combination of upside, net option sentiment, technical flow, and social sentiment. Maybe the moving averages. In the products now, you don't necessarily have visibility, but just go and look in the app and look at the net option score graph, the upside graph, and you'll see exactly why it had such a low momentum score. Those were just screaming negative. I mean, it's really cool graphs to look at, even irrespective of the momentum score. But it actually helped us get out today, because Wolf was like below 10 net option sentiment. It was looking pretty low. And then it jumped up to I think 29 today when we got out from the low, and so it helped us, both ways. I mean, who knows? It could go down more. We exited 3 of 4 of the positions in our trading letter because it might go lower, but it's the kind of thing where it's just like we always say to people, we had a 70% gain, right? Who knows if tomorrow they're going to announce that they renegotiated their debt, or whatever. Like I said, I don't think that's likely, but when you look at a 70% gain, like, I don't really necessarily need to hold out for 100% gain, especially if it can go the other way on me, but I might look a little bit. In terms of if you're curious how to get momentum score, there's really only 2 ways. There's, buying the trading letter where you get like a highs and lows in momentum score every day. I think it's the top. I think it's close to like the top 20 stocks, high in momentum score and in low. Then you can also, Steven, if you want to join the Discord. I mean, no one really ever takes me up on this, but the Discord's supposed to be interactive. If you're ever curious about the momentum score on a specific stock, or some more information about it, I'm not going to be an errand boy all day long getting momentum scores, but if you ask a reasonable amount, you will probably get some momentum scoring out of me.
So the Discord is linked in the description on YouTube, so you can click on it and join it now if you want. I want to spin to Bitcoin because Bitcoin basically, I don't know if it technically hit an all-time high, but it was right there today if it did not. And it's still in the green right now, up 0.8% on the day with the markets being red. Do you think Bitcoin is leading the markets now that it's gotten to its all-time high? Are the markets overall indexes destined to get back there as well? Or do you think this Bitcoin move is a little bit linked to the spending bill that's looking to get passed, which I think is a little bit more spending than some had anticipated, and Bitcoin obviously trading off that? So how do you feel about what we're seeing in Bitcoin currently?
Yeah, I mean, we've obviously talked about the relationship with money supply and Bitcoin, right? Looking at our government, if it's going to spend more, it's going to be there's going to be money printed, right? So I think that's the obvious answer, but I also think there was like a Bitcoin summit in New York today, like that Eric Adams had. Like I just think it's like I think what we're seeing, right? And we're still seeing QQQ a little higher than SPY and option sentiment. And I think, we've kind of, I think, passed a lot of the general economic worries that were happening. And I think that's a function of what we talk about, where it's just like, I don't think China and the US are prepared for a prolonged trade war. And I think everybody knows that. And I think that's why the large cap growth companies are recovering, because I think that's kind of like AI trumping short-term worries about tariffs that could drag down the market. But I think a lot of people are saying, oh, Steven, you're feeding people a bad Discord link. Here, I'll make a new one, because I think I'm the only one.
Thank you for saying that, because I'll update it after this too. George, your email is just george@prospero.ai, right?
Yeah.
So
when I was younger, I always was like, I'll have made it when I'm just George at something.
And here you are.
Why can't?
I think I could get it easily if you want me to just.
No, because I don't know. Like that one just might be bad. Like something that's very annoying about Discord is no matter how many times I say generate a link that never goes bad, it always goes bad. Now I want to see if the one on our website, I think that's probably bad too. I want to write a strongly worded letter to Discord about their links. This is like not the first time I've had to like generate a new link after saying.
Well, let us know if that one works for you.
The website one works. So I don't know what junky link you're getting, Steven. But yeah, I kind of just like stopped mid-sentence there. I think I recall what I was saying. That large cap growth is still looking good, and there's a lot of like bull signals there. So I think that like Bitcoin is just a more extreme example. And I mean, I think there's a lot, like I think you think Coinbase getting added to the S&P 500. I think that's good signaling. Obviously, it's a very pro crypto market. So like it's the kind of thing like we're saying, when people want to buy risk now, right? I think Bitcoin, I think cryptocurrency stocks are going to be the most popular way to buy risk. So I think that's something that we always keep in mind, but it's always kind of hard. Like, the way Bitcoin runs, it's kind of hard to say like, oh, am I getting in right before the dip and everything like that. And that's why we always caveat like when we see things like MSTR and coin like both at 100 then option sentiment, that's when we kind of be like, okay, this is like too much to ignore. But as we always caveat, like we even trust that kind of thing less because of the non-transparent options markets in cryptocurrency. And some people in the know could be betting, but there could be like a lot of other people with a lot of money that are starting to bet against it and are planning to short it. And it's just like there's not enough transparency in that market. That makes us nervous. But yeah, there's a lot of the other side to that is basically there's a lot of macro bull signals that exist for cryptocurrency that don't necessarily exist for even other large cap growth stocks. So I think or I think we'll see continue like I think that's why it's kind of like what we were saying with Palantir, right? Where it's just like, oh, is this overvalued? Well, no, it's not overvalued if it has like government support, which Palantir also has. It has like a big retail army of enthusiasts. It's kind of hard to say a stock like that or a cryptocurrency or whatever is ever overvalued. And I think that's how you see these values climbing because it's always hard to make the argument that it's topped out on its value.
And we are getting near the end of our time, but I have 3 topics left. So let's try to push through these because I don't know if you realize this, George, but the market is actually closed on Monday for Memorial Day. So we might be delayed a bit in our live streams. So we'll need this extra content to push us through. But Klarna, buy now, pay never. Is that what it's becoming, George?
Yeah, I mean, I think I saw like I actually didn't. Oh, I think I did send this topic to you because it's one that I really love because we're always ragging on these buy now pay later stocks because it's just like it's so predatory and it kind of serves them right. I think it said they had like a 99 like maybe $1 million loss. I don't think it was billion. And a lot of these people were like buying like lunch or they mentioned like burritos specifically. And it's just like, yeah, I think if you're financing, if like you're so predatory that you're like financing people's burritos, and they stiff you, I just think that that's kind of funny. I don't think that these businesses should really exist. I think they're really I think they're really shit businesses. And I mean, the thing about it is like the credit card interest rates and the way they charge, it's like it's all really shitty and it's a shitty in like environment and like the amount that these credit card companies make off just basically like overcharging people that are just like in bad situations and are trying to like spend themselves out of it, or not everybody, some people are just like very gloriously living behind their means. So I don't think everybody that gets in credit card debt is in some kind of desperate situation. But yeah, like I think it's kind of hilarious that people are like stiffing Klarna on like a lunch because I mean it's kind of weird in some ways because I do think it hurts your credit score, and hurting your credit score over like a lunch um seems uh seems a bit odd. Um but yeah, I think like I think the only thing is maybe some people are trying to stick it to the Klarnas of the world, and I do like that.
Spinning now to CoreWeave, which is up 167% since they IPO'd just about 2 months ago, crossing the $100 mark. They reported 420% revenue growth, but lost $1.49 per share or $314 million. Do you have any thoughts about CoreWeave, where it can go from here? Would you stay away, or is it more interesting now with that kind of growth?
I mean, I think what's its market cap?
Like 52
Mm,
billion about?
yeah, I mean, it's interesting. I mean, it's definitely interesting. Um, I think that I want to look at its forward EPS before I finish this thought. Let's see. Oh, I hate when it brings me to Yahoo Finance when it does not have a forward P. Oh, unsurprising. 0. Um, the NASDAQ one sometimes has like um, forward EPS. Um, oh, 2025 negative 69, 2026 negative 530, which is like that is actually odd. They must be like doing a lot of R&D spend in 2026. Um, but 2027 is 42. So I think I just want to check out Nvidia for a baseline. Let's see, because everybody says, is this the next Nvidia? Yeah, I mean, it's not. Like, even so, Nvidia in 2026 is 33.43, 2027 is 26, and 2028 is 21. So, like, actually, Nvidia is pretty cheap right now. That's crazy. People really got down on the market. When you look at that, you really see how much people want to speculate on things. And like that's the difference between a more seasoned investor and, kind of, I think, a lot of retail driven momentum. And, obviously I'm saying season, there's institutions in it for it to move like that. But I think that's one of those like retail driven trades where institutions get in more retail. Like it's just going off the rails. Like a negative 530 2027 EPS. And you're just like, that's a real long tail waiting to make money when you've got Nvidia right here looking like they're in a better situation vis-a-vis China, talking about, a future where they're not as dependent on chip sales and more integration. Like it's one of those things that like, and especially like the Prospero signals, Nvidia is looking a lot better. We own Nvidia. Like I didn't know when we would own Nvidia again, and it's looking really, really good. I don't like though. Like that's the kind of thing that I think we'll own it, right? As like our long, unless like QQQ net option sentiment like goes real bad, or net option sentiment for it goes real bad. But yeah, that's a classic of like, we love growth here, right? Our bread and butter is growth stocks, where we are kind of hedging with, especially like small mid cap shorts to manage our risk. But there's just like, there used to be a term GARP, like in value investing, growth at a reasonable price. I don't really think people talk about that anymore because I think those same people think that like all of the growth prices are unreasonable. But like I think that's the best thing that's the best way to describe like what we are looking for. We're looking for very growthy stocks that don't have just like absolutely crazy multiples. Could we pay um could we pay could we play CoreWeave at some point? Yeah, definitely. But that EPS and the relative EPS makes it kind of scary.
Jonathan's asking about FSLR with 100 net option sentiment. Are you intrigued or surprised?
I'm looking at where it is on price to decide if I'm intrigued. I mean, it's just a bad environment for solar. And I don't think its upside is very good. If its upside was better, I'd be more intrigued. And man, in the last month, oh no, 6 months? It's got a weird chart. Like, what is that like weird little hitch where it went up to 191 and then like shot back down? Odd. Yeah, I would have to follow the news more. But anyway, it's just like let's call this the reverse Palantir, right? Even with that 100 net option sentiment, upside would have to be higher, right? Like, whereas, Palantir has a very friendly, regulatory environment, government environment, like solar very much does not. And, I don't know. I would say that like it being at 100 net option sentiment probably means that people are starting to see value in it. And I think it's probably in our trading letter. I do think it is, but it's not the type of thing we'd have in our investing letter because upside just is not high enough. And then we have those like, in our high conviction investing letter, it's just much more. We need that macro story to match up too. We did it at GameStop. GameStop is kind of the exception because I think the macro story on the GameStop is it doesn't matter and retail is going to keep buying it. And I just trust that, and I trust that there's like a certain floor on it at all times. And now because of the like them saying it's going to buy crypto, I do think it's moving a little with crypto, which is kind of hilarious because they haven't bought the crypto yet. So crypto going up kind of isn't all that helpful to them in the end.
Well, George, you have your work cut out for you today because we are just 9 minutes from closing
Oh
bell.
God, Stephen, and I have something right at 4. All right, I got to rush. No time for goodbye.
Goodbye. We'll see you on the other side. Everybody, stick with me. We've had over 2,000 people tuning into the stream today. George will tune back in. Let me make myself big. Did that work? Hello, hello. Is my computer frozen? Oh, there we go. Okay, so George will be right back. He's going to make some live switches to the model portfolio. And we are in a time crunch, so he'll do it quickly, but he's going to look through the signals and make some switches. Let me take a live look at the net option sentiment that we are currently seeing. It is still at 0 for the SPY, 26 for the QQQ. So pretty similar to where we started in the stream. Bitcoin is actually rising back up again. I think it's up about 1.7% on the day now. So Bitcoin is kind of defying the market as of right now. But let's see. Actually, the markets are kind of rising a bit here. Still down 1.2% for the QQQ, 1.5% for the SPY, but not closing the day at the lows as of right now. So we'll just wait here for George. If you guys enjoyed all of our topics today, please like the video. Let's see how many likes we have on YouTube currently. We've been trying to hit double digits on every stream. So if you haven't liked yet, hit the like button. We currently have 6, so we need 4 more of you guys to tap that like button. Twitter, I'm not sure how many we got, but we got a lot more viewers on Twitter. So hello, Twitter. Sorry, we focus on the YouTube comments because it pop up right in StreamYard, but we appreciate all of you as well. That's where most of our views actually come from on these streams. So we'll just wait here for George. Thank you. I'm sorry, I didn't want to say your name wrong, Pawa, for asking about the Discord link. George, we are still seeing 0 for the SPY in Prospero. Wait a second. Let me get George to join here on the screen.
What?
Here we go. We're seeing 0 for the SPY still and 26 for the QQQ.
Wow. Right into, I mean, it's not a bad. Oh, am I not sharing it?
No, you are not.
Ugh.
I'm seeing a lot of mentions of bonds now. The bonds are rising. Maybe that is affecting the market. Do bonds control the market, George? Is it true? Does the market follow the bonds?
Like the broad allocations, absolutely. Right. And I think that's what, if people are, there's only so much money if people are putting money in bonds and pulling them out of equities. And it's really about the relative risk when you're talking about that. Because if bonds are basically yielding higher, they're still viewed as safer. Then you're taking that much more risk by buying equity. So that's the main mechanism that moves the capital. But there's another thing at play where is that when yields move fast, it just creates a concern. And kind of what I feel we're talking about here, a concern that there's something brewing. That's a bigger problem that is not yet released. And I think that is, probably just as much of what we're dealing with as as much as the capital thing.
Makes sense. And I saw Japanese yields were actually highlighted as well. And last August, there was that yen carry trade, 3-day kind of volatility. Wonder if that's going to affect the markets.
Oh, damn. Well, I did add a good amount of shorts today that aren't reflected in here yet, but I might want to drop some more longs now that I'm seeing that drop list. Are TTD and AMG wins? Let me know.
TTD loss. Both loss right now.
God, this is going to be a tough one. Is it really a good day for this? Right, so we added those two already. I think we kept our Jack in the Box. Why not? Actually, let's do that. PCH is always weird. I'm not playing around with it. Okay, anything here looks interesting. I think.
Gosh, Jack in the Box is getting hammered.
I think we have an open Jack in the Box.
I don't want to see that on with an 8 momentum score. It might be the next bankruptcy.
Yeah, but if you see the lowest one is I think I did this. I have to write the summary super fast, but no time today. All right, we did it. It was an abridged one, but I got to get out of here.
Yes. Bye, George. I'll say our goodbyes to the chat, and then I'll wrap it up. Thank you, everybody, for tuning in. We are going to be back live next week, but like I said earlier, Monday is an off day in the market, so I'm not sure if we're just going to be the regular Wednesday 3 p.m. time or if we'll do a Tuesday, Thursday thing. So watch out for the schedule on that. Besides that, enjoy the rest of your trading week, everyone. Enjoy your weekend, your nice 3-day weekend, and we'll see you back here next week. Goodbye, everybody.